Another day, another week. The government's still shut down. Shocking, these yahoos still don't seem to care. But that's not what we're here to talk about. We're here to talk about the mortgage market, although those yahoos do affect our market to an extent. Now, we've had a very delayed consumer price index number come out this week, and it was a skosh under expectations. So headline consumer price index was supposed to be up 0.4%, or I guess not supposed to be, but was expected to be up 0.4%, and then ended up 0.3%. And the core CPI, which strips out food and energy, was expected to be up 0.3%, and it ended up being up 0.2. It was actually up 0.23, and so they round up or down on this. And so those little extra numbers matter in future months, because when you look at the overall like year-over-year inflation numbers, they'll actually add those in. So you could get a month where you're still 10 basis points less, but inflation actually stays the same, or the number does, because of those extra rounding factors. So that's a little bit of fun fact for you to know on this. Mortgage rates pretty much treaded water all week. We're slightly worse ending the week than we were starting the week. Next week on Wednesday, the Federal Reserve is likely to cut interest rates another 25 basis points. Again, this is not going to make mortgage rates come down. In fact, like we saw last time, mortgage rates could go up on the news. The reason being is everybody is going to be listening, not for what the Fed does, because the Fed's pretty good about crafting their next steps, but about what they say for the future. So like for the coming months and for next year, if they think that they're going to be able to cut rates more. And if they do say that, then we'll see rates improve. If they don't say that, or they say, hey, we think we're done with cutting rates, then we will see rates potentially move up on that news. I mean, in my personal opinion, which is just that, my own personal opinion, I mean, the economy overall is still chugging along. Now, we should get some GDP numbers next week to get some data on that, so we'll be able to see a little more. But, I mean, if you got inflation not coming down a lot, if you have tariffs that are potentially making some prices go up, and you're relatively at full employment, then there's just not a lot of room for rates to go down. This was a long one, so I'm going to cut it off here. As always, if you need anything, I'm here to make your life easier. Until next time, friends, peace out.